Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to another episode of our daily series dedicated to price action based technical analysis here on the Extra Speed Live. Well, before we kickstart the session, let's run through our daily routine to confirm that truly we are on the same page. So, if you can see my screen and you can hear my voice loud and clear without distortions, please, I'll really need your feedbacks in the comment section. Just type in hi, and I will get to know that we are good to go this morning. And thank you very much as you do so. I'm looking forward to your comments while I load up my comment box. Okay, I'm trying to load up my comment box, and what do we have here? All right, okay, I can see a handful of comments. I'm loving this. Thank you very much, Panoyo621, Kerry 7945651. Thank you very much. Ramona85, good morning to you. Thank you very much. Muslim Energy, good morning to you too. Hello, Carrie. How are you doing this morning? Good morning. Omar9, good morning. Who else do we have here? I can see. Okay, thank you very much, Carrie. Hello, Steamroller. Good morning to you too. Kellen says that I don't hear you. Are you really sure you can't? Please, I've not gotten any feedback of such that you can hear me. I would suggest that you restart your app, shut it down, and restart it all over again, and let us see what you have after that. Okay? Thank you very much. So, with a handful of feedbacks here, I'll take this as a positive confirmation that we are good to go this morning. And on this note, I welcome you again to yet another promising edition of the Extra Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we are going to be taking another fresh new look at the current market structures of the assets on our watch list, utilizing simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for the assets on our watch list ahead of the New York session today. Well, so far this week we have been monitoring four major assets, which includes the USOILSPOT, the USTech100, the GBPUSD, and finally my favorite, of course, the XAUUSD, all of which did very well in the last 24 hours. Remember, the week started very slow for us all as the price was initially choppy as we saw range bound trading activities during the first 24 to 36 hours of the week, and finally our patience paid off as we had significant movement of price action across the assets on our watch list in the last 24 hours. So we are going to be taking a look into that in a moment and see how we will be managing our existing position while we also look for data and information that will help us strategically position ourselves ahead of today's trading session. For those of you who are joining us for the first time, you are welcome on board. I'm very excited to have you around with us this morning, and I'm very sure you will be asking what this is all about. Why are you here, and what do we do here? Well, as technical traders, we gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York session. The session usually kickstarts at 10 a.m. UTC 11 a.m. West African time. And I recommend that you stay tuned in during the course of the session so you don't miss out on the valuable insights that we will be sharing today. My aim is to equip you with the knowledge and skills necessary to make informed decisions independently. The more time you spend with me, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So, once again, I extend a warm welcome to you and I encourage you to actively engage in the comment section. So, with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar. And on the economic calendar, we usually check on the economic calendar because of simply the fact that the fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic events. So on the economic calendar, we usually focus on high impactful event from the economies that affects the asset on our watch list. And based on the asset we have for this week, we are going to be focusing on only the United States and the United Kingdom economic docket. Now, for today, Wednesday, November 29, we have only one high, I think two high impactful events, which are the gross domestic product annualized for quarter three, which is coming in from the United States, and of course, the Bank of England's Governor Bailey's speech. We will be having a comment or an insight later today. So these are the major impactful event. However, I had to include the medium impact event so that we can also see what other fundamental factors that will be driving the market sentiment for today. Now, the first one we're looking forward to, which is the most important one, is the gross domestic product annualized for quarter three. Now, this is a key economic indicator representing the annualized percentage change in the US real GDP during the third quarter. Anticipation of this event can significantly impact market sentiment as it provides a comprehensive view of the economic health and growth of the United States. Now, a higher than expected GDP growth often strengthens the market confidence in the US dollar, leading to positive price action and potentially influences central banks' decisions on interest rates. Now, if you look at the previous data for the GDP for the previous quarter, it came in at 4.9%, and we have economists projecting 5% for the last quarter. Now, this is a sign that there has been a little bit of expansion, which is what the majority of economists are thinking based on what they can based on the data they have on the ground. So we want to look forward to what the actual data will be. Will it be just as expected, below expectations, or even be just as expected? Then later on today, we look forward to the Bank of England's governor, Andrew Bailey, is going to be having a speech in about 6 to 7 hours from now. And his speech holds considerable influence over the financial market, as his remarks will provide us with insight into the bank's monetary policy stance, economic outlook, and potential future policy actions. The anticipation of this speech can significantly impact the market sentiment, as traders, investors, and market participants will closely be analyzing the rhetorics for clues about future policy directions. Then we also have a couple of more speeches from the United States. We have Mester. She is the president and CEO of the Federal Reserve Bank of Cleveland branch. She's going to be giving a speech in about 9 to 10 hours from now. Then we're also going to be having the Fed Beige Book. The Beige Book reports the current U.S. economic situation, and through interviews with key business contacts, economics, market experts, and other sources, we gather each of the 12 Federal Reserve districts a survey that gives a picture of the overall U.S. economic growth. So this is another event that majority will want to be looking forward to today. Now, with all the information we have gathered here, and in fact, we have a better timing to anticipate how we will be capitalizing on the next move. And as technical traders, we want to be diving right into the chart using our fundamental tools to guide our trading decisions for today. And of course, we do know that the anticipation of these events alone usually affect the market sentiment, and in the long run we shall be seeing this reflect on the chart as price action. So talking about price action, let's dive right into the business. And the first asset we will be looking at today, as usual, is going to be the USOILSPOT. And finally, we saw price gains. We saw the asset gain some momentum yesterday after being taken out of 2 buy positions in a loss prior to yesterday's bullish momentum, as you will see here. And for those of you who took advantage of this move, well done to you. Well, at this point, we currently securing over 150 pips across at least 2 buy positions, as the US oil is on a path of modest recovery. Now, this resurgence in oil prices is fueled by the anticipation of potential production cuts by OPEC Plus members and, of course, the weakened US dollar. Now, the upcoming OPEC Plus meeting that is coming up tomorrow holds the key to future supply dynamics, contributing significantly to the positive sentiment in the US oil market. However, concerns loom over supply disruption emanating from Kazakhstan due to a major storm in the Black Sea area, causing interruptions in oil export from both Kazakhstan and Russia. And this export here is to the tune of up to 2 million barrels per day, which is quite very significant considering their quota to the supply of oil globally. And amidst this complex market dynamics, we are going to also be looking forward to the US GDP data for Q3, which will also be affecting this asset today. So let's look at things from a technical standpoint, and for the sake of those who missed out on our earlier session, you have the privilege of being on the same page with us, as we will be looking at how the week started for us here in this community and what led to the decisions we made so far this week. Now, at the beginning of this week, we initially observed price action confined within a range that is between the $75.75 level and the $74.80 area, which emphasized the level of indecision going on at the beginning of the week. And you know how we do it in this community. Whenever we have this kind of flat range, we exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, at the beginning of the week, it was more of a bearish momentum as we saw price break down and retest our key level at the $75 area to incite a sell-off in this market. However, as soon as price tested the $74.15 level, which happens to be the lowest point for this week, we begin to notice the resurgence of buy pressure again, taking us out of that position with a reasonable amount of profit before price action climbed up. And remember that we had we had buy stop order above the $75.75 level, which got triggered on Monday during the New York session. And unfortunately for us, that position went into a loss as price action dropped back down to the downside. Then during our live session yesterday, we acknowledged that we will be buying again above the structure. That one also was triggered, and that also went into a loss until finally price action did break out again with an engulfing bullish candle, giving us the opportunity to recoup the loss we incurred at the beginning of the week, as we saw this huge engulfing bullish candle breaking out of that structure for the third time. Now, with that situation, we had our first buy position triggered. And remember, we said here yesterday that we will be adding more positions at the breakout of the $76.25 level and the $77.10 area to maximize the potential of this bullish move. And as it is right now, we have a minimum of 3 buy positions running in profit right now, where the first buy position is running with about 145 pips, while the second buy position is currently running with about 100 pips. That's about 240 pips, while the third position is running with about 10 pips. So we have a roughly over 250 pips in profit on the US oil so far this week. So we've been able to recoup the loss we incurred at the beginning of the week, and in fact had some more profit on it. And well done to everyone who took advantage of this buying opportunity. And as you know how we do it in this community, as soon as price action moves significantly well like this, the next thing we want to be doing is to protect and secure all buy positions, as we want to see how the market participant will be anticipating the GDP data coming up today. So personally, if you would ask me, based on where price action is right now, I will be suggesting that anywhere around the $76.80 level and the $76.50 area seems most appropriate to protect all buy positions at this point in time. And while we try to protect our positions, please ensure that we give enough breathing space for price action to move around. Now, with a well-secured position at this juncture, what is going to be our next line of action? Are we going to continue seeing buy momentum, or are we going to be seeing selling pressure come in any point in time to push price to the downside? Well, before we go into the details here, I would like us to run through the higher time frame, especially for the sake of those who are not part of our earlier sessions, so that they can also have the privilege of being on the same page with us. Now, before I go up into the higher time frame, I want to emphasize that amidst this complex market dynamics, which is characterized by the US oil market, the attention of market participants is currently shifting towards the US GDP for the third quarter, which is coming up later today. And with expectations of a robust 5% expansion, however, a weaker than expected GDP figure could raise apprehensions about the world's largest economic outlook, that is the US, potentially exerting downward pressure on oil prices. So it's very important that we move all stop losses at this point, secure this position as we anticipate the GDP data coming up today. Now, with that being said, let's scale up into the 4 hours time frame where our analysis for this week started from. Now, on the 4 hours time frame, this was what we saw at the beginning of the week, after taking into consideration the nature of price action in the last 5 to 6 weeks. And what we saw here was an obvious bearish outlook, as you will see how price action transitioned into a descending channel after we connected the series of lower highs, as you will see here, giving us the resistant line of that descending channel, and then we connected the series of lower lows, giving us the support line of that descending channel. And as long as price remains within the descending channel, we want to be looking out for selling opportunities as price is assumed to be within the seller's territory. However, something interesting happened at the beginning of the week as we saw that the $75 level was unable to be broken by the sellers, hereby increasing the chances that buyers are likely going to be breaking out of the resistant line of that descending channel. And we saw buy pressure resume, and not until yesterday we saw price break out of the resistant line of that descending channel, which from a technical standpoint could be considered as a bullish signal, as the resistant line may no longer be strong enough to negate the bullish attempt anymore. Now, the question going into today's trading session is, are we going to be seeing a situation where price will come back to retest the structure, which is expected from a technical standpoint after price breaks out of a key structure to incite the uptrend move, or will this breakout here turn out to be a false breakout? Well, for me, I wouldn't consider this to be a false breakout based on the sentiment in the market right now. But one thing for sure here is that we will be using this $76.60 level as a yardstick to guide our trading decisions for this week. For today. Now, if price remains above the $76 area, there are chances that price may continue to the upside, breaking out of the $78 area, which interestingly shares a confluence with that major descending trend line identified earlier. Now, with the information we have gathered here, let's scale down into the 1 hour time frame so that we can see what is really going on around this area to position ourselves for the next big move. Now, scaling down into the 1 hour time frame, we will begin to see things more clearly. Now, on the 1 hour time frame, like I said earlier, we already have 3 buy positions running. So we have this one, we have the $77.10 broken right now, which was the highest point since last week Friday, as you will see right here. And then we saw selling pressure right here during Tuesday's trading session before it finally got broken with an engulfing candle to give us a signal that buyers are pushing the pace at this point in time. Now, for those of us who had missed out on this opportunity, well, let's see if the market will go up a little bit and do some retest back into structure to give us an opportunity to join an uptrend continuation. That is one scenario we are going to be looking at here. How we're going to be seeing price retest the $77.10 area, making it a new platform to incite more buying opportunities. That is one scenario. And if that happens and price continues to the upside, remember we also have the $78 level we identified on the 4 hours time frame to incite an uptrend move. Now, with this bullish idea in mind, I also want to emphasize that you should remember that we identified an ascending trend line right here on Monday, I guess, Monday or Tuesday, we did identify this trend line, which we said we will be using to guide our bullish momentum. Now, as long as price still remains above this ascending trend line, we shall feel comfortable in a buy position. So even if we see selling pressure resume at some point today, dropping to the downside, let us just note that we have a juncture here that could be a platform to incite the next wave of bullish momentum. So as long as price remains above the ascending trend line, let's feel very, very comfortable in our buy positions. However, if at any point in time today price action does break down the ascending trend line, then at this point we want to start considering selling as well. Now, if we see the situation here that price breaks down the ascending trend line and then does a retest of structure to the downside, then we want to be selling the breakdown retest of structure. And we also want to note that we also have a trend line here. I'm not sure I'm still live because everything is telling me Please let me know in the comment section if you can hear me and see my screen, because I'm not sure. Okay, give me a moment. Let me sort this out and I'll get back to you in a moment. Sorry about that. I got to notice that we are no longer online, but I think we are back on right now. Please let me know in the comment section if you can see my screen and you can hear my voice, so that I can know that we are all on the same page, please. So I'll continue with what I was saying earlier. So I said here that even if price begin to show signs of selling pressure around the $77 area, we should not panic. What is happening here? What is happening here? Okay, so we are back. Sorry about that. So like I was saying earlier, I said that even if selling pressure resumes around the $77 area, we should not panic, as we still have this ascending trend line right here in place to incite more buying opportunities, and that we are not going to be selling unless price breaks down, retest the ascending trend line to the downside. Now, while we sell below the ascending trend line, we should also take note of this descending trend line we identified on the higher time frame, which was broken during the New York session yesterday, as you will see here. And from a technical standpoint, when price breaks out of a key structure like this, we expect price to come back at some point, maybe to retest it to incite an uptrend move. So while we sell at the breakdown retest of this ascending trend line, please, we want to take note of this trend line we identified on the higher time frame, where depending on how price reacts to that structure will determine if we are going to be adding more sell position, that is the breakdown retest of that one, or we're going to be buying if buy pressure resumes above that area one more time. So for me personally, the outlook on this market still remains very bullish. So let's see how the ascending trend line will be maintained. So far this week, we continue to hold on to a bullish bias unless the ascending trend line is broken to the downside. So these are my view on the US All Spot for today. Once again, congratulations to everyone who are taking advantage of those buying opportunities from yesterday, and hope you've secured your positions like we talked about earlier, and let's see how the market will play out from this current point in time. If you have any questions, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we will be moving on to the next asset on our watch list. And thank you very much, Steamroller. Thank you very much, Rising Rick, for those confirmations. I really do appreciate. All right, thank you very much, guys. All right, so I think I'm having some itch in my internet reception here. I think we are back on live again. So I can see some other comment here. Hello, Innocent Babe. I just see your name in the comment section right now. Glad to have you around. Liba Date, good morning to you. As 1881 wants us to GBP, JPY, and XAUUSD. Unfortunately, GBP, JPY is not on our watch list. So the XAUUSD, we are going to be attending to that in a moment. So I encourage you to stay tuned in. Jess Patel, good morning to you. Hello, Patricia, good morning. Pavel Raju, good morning to you. Kali B 14's asking what tool do you use actually? Well, I usually mention these every day: trend lines, key levels, and chart patterns. Basically, those are the three we use to decide our trading decisions for today. Now, I see Steamroller here asking, what do you think will happen to the price of oil and gold if on the 15th of December the bank defaults on its $149 trillion repayment? Well, in this case scenario, if the bank, it could potentially lead to the decrease in the price of US oil actually. And this is because a default can create uncertainty and instability in the financial market, leading to a decrease or in loss in confidence from investors and potentially result in sell-off of major assets such as safe haven asset as gold. Safe haven assets will definitely gain some traction, but oil assets will definitely lose traction as a result of this instability that will ripple into the market as a result of default. So that is my own personal idea on what is likely going to happen if that is going to be the case. Then I can see, okay, no other questions. All right, all right. So in the absence of no other questions, I do hope I answered your questions, Tim Roller. And if there are more, please let me know in the comment section. So in the absence of no further questions, I do hope you've marked out these levels on your chart. And in that regard, we will be moving on to the next asset on our watch list. So this is okay, beautiful. So the next asset we are going to be looking at today is the USTech 100, and we had a phenomenal 24 hours. Though we had a couple of stop losses yesterday, as we were still holding on to the bullish buyers. Remember, we talked about this yesterday, and we said that this newly identified ascending trend line is going to be playing a major role in determining the direction of price action for yesterday. And in fact, we did agree here that as long as price remains above that ascending trend line, we shall feel comfortable in our buy position. And for the fact that price action still remains above the key level at the 15,900 area, which we identified on the higher time frame, we shall maintain a bullish bias. Now, let's, for the sake of those who are not part of our earlier session, let's run through how the week started for us in this community and what led to the decision of buying this particular asset. Now, at the beginning of the week, we initially saw that price action was confined within a specific range, that is between the 15,965 and the 15,925 level. And for the fact that price was above our key level for the week, we were looking out for buying opportunity. And remember how the 15,900 area had a strong memory for buying power in the past. So with that being said, we positioned ourselves above the 15,965 level on Monday as we capitalized on this bullish momentum all the way into the 16,000 ish, where we were able to move about 80 pips before the bearish momentum came in, and of course we did move our stop losses accordingly, so we were able to take in a reasonable amount of profit from that single breakout. Now, during our live session yesterday, we said that excuse me, we talked about how price action was back into that range we identified at the beginning of the week. And I also mentioned that we are at a very crucial juncture in the market, that we will maintain the bullish bias as long as price broke out of the 15,965. Now, we saw price break out of this level a couple of times. We had the first breakout here, we had a second one here, all of which went into a loss before the final and third attempt happened, and it was successful, and since then price action had continued to climb new highs. Now, with the situation we have right now, we have about 3 positions running in profit. We have the first position here, it's currently running with about 115 pips, while the second position is running with about 70 pips. That's a total of over 220 pips. And the third position is running with about 30 pips thereabouts. So we have approximately 250 pips on 3 buy positions, and as at the midweek, which is quite reasonable and considerable as well. And thank you very much for being part of this journey, and for those of you, congratulations for capitalizing on that move. And personally, at this juncture, if you still have your buy positions running, I would encourage you to move your stop losses, secure this current position as we anticipate the GDP data today, which is likely going to be sending in some volatility into the market. And from this current perspective, I'm of the opinion that anywhere right below the $16,000 area, sorry, the $16,050 area seems most appropriate to put all stop losses to. And always remember that you want to be giving enough space for price action to move around as well. So keep this in mind while we continue to monitor price action. Now, with this information we have gathered here today, what is going to be our next line of action? Are we going to continue buying the USTech100, or are there chances that price action can drop to the downside and take us out of our buy position to probably incite a sell-off in this market? Well, before we can answer that, I want us all to be on the same page, and in that regard, let's run through the 4 hours time frame where we started our analysis for this week, so that we can see things the way we saw it at the beginning of the week before making any informed decisions. So right here on the 4 hours time frame, what we did was to take into consideration the nature of price action in the last 5 to 6 weeks. I think it was since the last week of the month of October, and we saw here that price action was within an ascending channel, which transitioned, which further emphasized the strength of the buyers in this market. So we connected the series of higher lows, which gave us the support line of that ascending channel, and then we also connected the series of higher highs, which gave us the resistance line of that channel. And whenever price action remains within an ascending channel, we of course want to be looking out for patterns and structures that supports the idea of buying that asset. Now, in addition to the ascending channel, were a couple of key levels which are identified here, but the most important one is the 15,900 area, which happens to be the level we said we will be using to guide our trading decisions for this week. So it literally means to serve as our key level. How you know how we use our key levels in this community: as long as price remains above the key level, we'll continue to look out for patterns and structures that supports the idea of buying that asset. Now, we saw what happened here at the beginning of the week. We saw buy pressure resume again, giving us signs that sellers were finding it difficult to break through, just like it's failed in the previous week as well. And during yesterday's trading session, we saw again here that sellers were unable to break down that structure, giving us more confidence to be part of that uptrend move. And thank goodness we capitalized on it, and we we joined that momentum all the way to the upside. As you will see right now, price action is currently trading around the 16,050, 16,055 zone, where it appears that it has broken out of that structure a little bit, but we cannot conclude yet that the breakout has finally happened. As you will see here on the 4 hours time frame, we still have about 1 hour 14 minutes for this candle to close. It could still turn out to be a shooting star candle, so we shouldn't get too excited as to jumping into that positions right away. Now, in addition to this, I want us to acknowledge this range where price action had been confined within the 16,055 and the 15,900 in the last 2 weeks. And when price falls into a range like this, you know how we do it in this community. We exercise patience and wait for either the breakout or breakdown of the range for trading opportunities. Well, as it is right now, the chances that price wants to continue the uptrend is increasing. As you will see, price is just right above the support line of the ascending channel and exactly right at the resistance line of that flat channel we identified earlier. So our center of focus for today's trading session is going to be around the 16,050 and 16,055 area, where depending on how market participant reacts to this level, or let me say zone, will determine if we are going to be buying more or joining a potential bearish move. As if selling pressure persists below the structure, it is likely that the support line of that ascending channel will be broken to the downside to welcome selling opportunities. Now, for us to have a better perspective into what is going on around the 16,050 and 16,055 area, let's scale down into the 1 hour time frame, where we will begin to see things more clearly. Now, scaling down into the 1 hour time frame, look at where we are. Now, look at where price action was at the beginning of the week. This is the highest point price action was at the beginning of the week before the breakout happened about an hour ago. Now, we capitalized on this breakout. We took advantage of that move. Now, for those of you who missed out on that move, let's see if the market will come back to retest the structure. If it does, the appearance of buy pressure here will welcome buying opportunities to join that uptrend move. However, if price decides to continue to find new highs, then we have another level around the 16,085 area, where if price action breaks out this level again today, we will be adding more buy positions to our sorry about that. So we will be adding more buy positions to our existing trade if this happens today. So labeling this out is very important. You want to be doing same, as we will be needing it as a reference point to guide our independent trading decisions. So we look out for more buying opportunities above the 16,085 level. However, like I said on the higher time frame, that if price action drops below the 16,050 level, and that if the breakout turns out to be a false breakout and selling pressure persists below the 16,050, then we might likely be ready to join a bearish move to the downside, as price would have broken down the support line of the ascending channel we identified on the higher time frame. Now, if that happens, we join with sell. We have multiple levels to add more sell positions, and in fact, if price action goes on to break down the temporary ascending trend line we identified here on the 1 hour time frame, we will be adding more sell positions to our existing trade. So the only condition that will make us want to be selling the US Tech 100 today is for price to break down and retest the $16,055 level. So mark out those levels for today, as our center of focus will be between the 16,085 and the 16,050, where depending on the direction of the breakout will give us an insight into where price is likely going to be closing for today. So these are my views on the USTech 100. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we'll move on to the next asset on our watch list. All right, so in the absence of no further questions, I want to assume that we are all on the same page. And in that regard, we shall be moving right into the final asset on our, sorry, is it the final? No, the next asset, sorry, it's not yet the final. So we're going to be moving into the next asset on our watch list. So the next asset we are going to be looking at today is going to be the GBPUSD, another phenomenal 24 hours we have here, as we took advantage of a buy position yesterday. And remember, prior to yesterday's trading session, we have been accumulating some buy positions. Remember, having positions around the 1.26200 level, the 1.26110 area, and then the 1.26380 level to join that bullish momentum all the way to the upside. And for everyone who took advantage of this move, well done, and kudos to you for being on standby to capitalize on that move. Well, after gaining over 300 plus move across 5 positions, the pound sterling still remains, the upward trajectory still remains very much intact, but we cannot ignore the appearance, or let's say the emergence of selling pressure in the last let me say 12 to 15 hours in this particular market. I'm not sure I'm being seen right now. Am I still live? Please, I would like you to confirm to me in the comment section if you can see my screen and you can hear my voice clearly. So I will just hold on a little bit to see if there are any response in that regard to confirm that we are all on the same page here. Oh my goodness. Okay, sorry about that. Sorry about that. Can you hear me now? Thank you very much, Innocent Babe, for that confirmation right there. So please confirm to me if you can hear me right now. Then I will just do a quick recap of what I've said so far. Thank you very much once again, Innocent Babe. All right. Okay, thank you, Steamroller. Thank you very much. I'm glad to be back on. So, like I was saying earlier, so I was saying that we capitalized on the bullish momentum since we have, remember, we've been accumulating buy positions since the beginning of the week. We bought at the 1.26110 level. Let me highlight it on the chart so you can see what I'm talking about. So, we bought at the 1.26110 area at the beginning of the week. We had at more positions at the 1.26270. So we kept on accumulating buy positions due to the structures we noticed here until finally yesterday our patience paid off as we saw that significant move to the upside, gaining over 300 pips across a minimum of 4 buy positions on this particular asset. And I also said that the continued upward trajectory is marking the 5th consecutive day that the pounds has risen, and presently it is around a fresh 3-month high in recent time. Now the US dollar finds itself under pressure as market sentiment leans towards the belief that the Federal Reserve has concluded its interest rate hike, potentially paving the way for policy easing in 2024. And as a result of this, we can see how the pounds had continued to grow, and the fading prospect for an early rate cut by the Bank of England also is contributing to this robust momentum as we see here. However, the stellar performance amidst the stellar performance of the pound sterling, it is crucial to acknowledge that the absence of significant macroeconomic data from the United Kingdom today will be playing a significant factor. Meanwhile, the US economic docket takes the spotlight with the release of the second estimate of the third quarter GDP growth figures. And the performance of the US bond yields today too will be a key determinant in shaping the US dollar's dynamics, providing an impetus to the GBP USD pair. So in light of this, we need to be very, very careful and should not get too carried away with the bullish opportunity we have here running. And for those of you who still have a buy position at this point in time, I will be suggesting that we move all stop losses and secure this position right now, or even get out of this trade, as we might likely be seeing some profit taking activities in anticipation of the GDP data, which would reflect on the chart as a retracement of that impulsive move. Now, with a well secured position at this juncture, how do we intend to capitalize on the next move? Now, what we are going to be doing today is to use the ascending trend line we identified yesterday as a yardstick to guide our trading decisions. Remember that we had this ascending trend line marked out, which has been supporting the bullish momentum since the beginning of this week, as you will see here. And since we have been witnessing selling pressure in the last 12 hours in this market, we might likely be seeing a retracement back into the ascending trend line, maybe in anticipation of the second wave of the bullish momentum that started this week. So that is one way we are going to be looking at this. But if you are a counter trend trader, a scalper who wishes to capitalize on a, I think about 30 to 40 pips move, you might want to be taking advantage of the breakdown retest of the 1.26870 area to join the decline to the downside. For me personally, I'm not taking this move, as I will wait to see how the market will react to this trend line to decide what my next line of action will be. So if price does break down retests like this and continue selling pressure persists there, I want to see how the market will react to this trend line. So if it breaks down the trend line and retest it, we are likely going to be seeing a downtrend scenario, then getting ready to join a bearish move. However, if it comes here and we begin to see buy pressure resume, transitioning into a reversal pattern, maybe a double bottom structure, head and shoulder, or even a falling wedge, we look out for buying opportunities at the breakout of the neckline to capitalize on the next move. So that is how we are going to be looking at anything below the 1.26870 area. Now, in as much as this is a possibility here, if we consider this strong bullish momentum in this market, we cannot ignore that buyers still have a say in this particular market. And in fact, if I want to be joining a bullish move here, I want to see price break out the highest point at the 1.27330 level to capitalize on the uptrend move. So that's how I will be joining a bullish move if price does not persist below the 1.26870 level. So this is my view on the GBPUSD today. Let's mark out these levels. The ascending trend line here, which is highlighted in red, is going to be playing a major role in determining how far this retracement phase will go and when the next bullish momentum is going to start happening. So I encourage you to mark out these levels so that we can use it as a reference point to guide our independent trading decisions for today. If you have any questions, feel free to let me know in the comment section. I will not be taking some time off right now because I'm already out of time, so I will quickly want to rush through the XAUUSD. But if you have questions, feel free to let me know in the comment section. So I can see you have a live that is always involving things that are not clear and clear. I'm not sure. I don't understand what this is all about anyways. Rio, I don't understand that too as well. Steamroller, thank you. Okay, all right. So in the absence of no other questions, let's just move right into the last asset on our watch list for today. So the final asset on my watch list for this week is the XAUUSD, my favorite, popularly known as the gold spot. And in fact, we also had a phenomenal move here yesterday as we scooped in over 750 pips move on this buy position. Remember that we were also accumulating buy positions around the $2013 area. We bought this since Monday. Remember, this position kept on running for about 2 days before we finally saw price break out of that $2018 area as we rode that bullish momentum all the way to the upside. It was another phenomenal day for us on the XAUUSD. And in that regard, for those who capitalize on this move, well done and kudos to you for being on standby to capitalize on the move. Now, the price of gold as at this point has surged to a 6-month peak, hovering around the 2050 during the Asian session before this bearish momentum began. And this remarkable move is underpinned by a surge in open interest, signaling a strong possibility of the current positive sentiment persisting in the short term. Now, the immediate outlook for gold remains very, very bullish. I will not argue about that based on what we are seeing on this chart, and this is primarily fueled by the ongoing selling bias of the US dollar, which is intensified by dovish expectations from the Federal Reserve. However, a crucial factor to consider is the imminent release of the US GDP data coming up later today, which has the potential to significantly influence market dynamics. So we need to be very, very careful on this one, and we shouldn't get too caught up with the bullish momentum, as there could be some profit-taking activity today in fear of what the GDP data will come up with. And if this is going to happen, there is a chance that price could drop to the downside for a while before another wave of bullish momentum will happen here. So in light of this, I want to be suggesting that all buy positions right now should be secured. Personally, I'm already out of this trade as I got my stop loss triggered around the $2042 area this morning. But if you're still in a buy position right now, I will encourage you to secure all buy positions at this point in time by moving your stop losses accordingly. Now, in preparation for today's trading session, how do we intend to capitalize on the next move as price action hits a new high? Now, there is something I would like to call your attention to, which is a perspective going on in the market right now, as economists are saying that the sudden increase in value of gold prices that started in the month of October may likely be caused by market participants who had previously bet on its value decreasing, that is selling before the beginning of the month of October, and deciding to reverse their bet and instead bet on its value increasing, hereby covering their short positions. Now, this reversal of bets likely could have contributed to the increase in the gold prices. Now, if that is going to be the case, is today going to be the beginning of a massive sell-off? As you all know, from a psychological point of view, when price action finds a new high, it usually takes quite a while before price gets acclimatized to that territory to gain that confidence to push price further to the upside. Now, usually when price gets into this high like this psychological expectation I just explained usually reflects on the chart as retracement phases, consolidation phases, and choppy scenarios. Now, if this is going to be the case, how far will this bearish momentum go before we get ready to join another uptrend move? Now, before I go into that, let me quickly show you something on the 4 hours time frame here, which will be one of our yardstick to guide our trading decision. Now, look at the 4 hours time frame here. Remember that we have this ascending trend line which buttresses the strength of the buyers in this particular market. Now, with the way things are going here, are we going to see a situation where price will retrace back into the ascending trend line to incite an uptrend, or will it even break it down to the downside to incite a sell-off? Or are we going to be seeing price break out of the resistant line of that range to capitalize on the uptrend move? Now, with the situation here, you would agree with me that we are at a crucial juncture in the market where price action has been trading around the resistant line of this ascending channel in the last 12 hours. Now, depending on what happens here, we might likely be having an idea of where price action will be going today. So in that regard, let's scale back down into the 1 hour time frame to see how market participants are currently reacting to that structure. Now, while looking at this, scaling down into the 1 hour time frame, you begin to notice that since price tested the $2,050 mark during the Asian session, we begin to notice some selling pressure resume around this area, resulting into what may look like a double top structure as we have the first peak here. Then price inability to break out of the previous high resulted in a lower highs, and you know how we do it in this community. Whenever we notice a potential reversal pattern like this, we want to be marking out the neckline, which interestingly lines up with the $2,043 level. Now, if price action breaks down the neckline, this will validate the reversal pattern with the hopes that price will drop further to the downside. And with this in mind, I took advantage of a counter trend opportunity around this area to see how far this momentum will go. And for those of us who capitalize on this move, well done to you for capitalizing on that one. But if you had missed out on that opportunity, it's okay. Let's see if the market will come back, retest the structure where continuous selling pressure persists here to incite a downtrend move. So that is the only condition that will make us want to be selling the XAUUSD today. Then we have another level at the $2,035.50 area, which I will be marking right here. So if price action breaks down that level as well, we want to be adding more positions to our existing trade. So do mark this level out on your chart right now, and let's see if the market is going to be breaking that one too to the downside so that we can add more sell position. Then our TP target for sell position is going to fall around that ascending trend line we identified on the higher time frame, where depending on how price reacts to the trend line would determine what next we will be doing on this asset for today. So this is my view as regards selling the XAUUSD for today. However, if it so happens that the sell position gets taken out and price climbs back up above this temporary ascending trend line I was able to spot here this morning, then I want to be considering that buyers may likely be pushing price further to the upside, and in fact I would only feel comfortable buying if price action does break out and take out all the sell positions around the 2050 area to join an uptrend continuation. So these are my views on the XAUUSD for today. So I do hope that you've marked out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Now, if you have any questions whatsoever as regards to the setup, feel free to let me know in the comment section as we round off for today's trading session. All right, so in the absence of no questions, okay, I see your comment, Levy2309, good morning. SZK33, good morning to you too. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, I will be rounding off for today's trading session. It has been a wonderful moment with you, and we were able to attend to 4 major assets which we have been monitoring since the beginning of the week, and we've done very, very well across the board, though we had some couple of losses on the US All Sports this week, but we were able to recoup the loss we incurred and even had some more profit on top of it, which was very, very commendable, and let's hope that price will continue to the upside on that one. So we've done very, very well on this asset so far this week, and in fact today we were able to identify new trading setup using fundamental tools such as trend lines, key levels, and chart patterns to capitalize on the next move for today. So I just encourage us all to be very patient, allow our structures to mature before we jump into any positions, and importantly, have a well-defined risk management strategy which will be consistent with all your trades from your portfolio. Remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. For those of you who joined us for the first time, I hope you had a wonderful moment today. I hope you learned a lot, and I encourage you to be part of the subsequent editions, as the more time you spend with us, the better you will become in understanding our analytical approach and eventually be able to use the information gathered here to make your independent trading decisions for today. So on this note, I wish us all the best of luck. Looking forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.